Morning and welcome to Saxo Bank's Morning Call. Today is Wednesday, the 2nd of January 2008. First of all, Happy New Year. And to the market, holiday news bullets. We had a string of numbers coming out from the US, which basically showed an US economy in very bad shape. The US S&P Case-Shiller composite year-on-year was out at minus 6.1% versus minus 4.9% prior red. The durable good orders also from the US was out at 0.1% versus 2.0% expected. The US initial jobless claims was out at 349Ks versus 340Ks expected. And continuing claims also from the US was out at 2713K versus 2645K. And finally, the US consumer confidence was out at 88.6 versus 87.3 prior red, which was a little better than prior red. We also had some numbers out from Japan, which basically showed a Japanese economy in line with the expectations. We had the national CPI year-on-year out at 0.6% versus 0.3% expected. This was a little stronger than expected, but the industrial production was out at minus 1.6% versus minus 1.7% expected. Finally, we saw that the inflation is easing a bit in Germany, since we have the consumer price index out at 0.8% versus 0.5% expected month-on-month. And to market developments. The US dollar was lower against 14 of the 16 most active currencies ahead of the ISM manufacturing data. And the dollar yen is now around 111.50, the lowest in the 3-week period. Treasuries was a little changed intraday period, and the Japanese bonds is trading a little higher on equity losses. However, the Tokyo stock market and consequently the Nikkei 225 is closed today. Stocks, we had the Asian equities started the year broadly in red, with Hang Seng down by nearly 1.4%, and this was the major trend, which we expect will also spill in over or work. This trend will continue in the European session, starting broadly out in red. Commodities, crude price is currently trading above $96, which is mainly due to two reasons: the speculation on the dropping of the U.S. inventories and the turmoil in relation to the assassination of Benazir Bhutto in Pakistan and the rise of fear of terrorism in this regard. Gold is advancing since it's a safe haven asset and is currently trading about $37.40 an ounce. So what is going on? The year continues or begins with a continuation of the theme from yesterday. Banks are in trouble. After a series of write-downs that concluded last year, the fourth largest U.S. bank, Wachovia, may now face a Q4 write-down of assets of $1.5 billion, or actually triple of the amount reported for Q3. So it seems like this trend that we of course hoped was ended last year, is continuing this year with further write-downs from U.S. Bank on assets related to subprime investments. The expected decline in December ISM factory index is already adding to existing speculation that for the fourth consecutive row, the Fed will cut the interest rate by 25 basis points. Currently, the probability calculated from the futures says that it's 92% probability of a rate cut of 25 basis points at the next Fed meeting. Also, the Asian stocks were dragged lower on the first trading day of the year as South Korean growth forecast was cut, and the Singapore economy shrank for the first time in 18 quarters. The calendar today, we have few numbers, but rather important numbers out. We had at 1500 GMT, we have the ISM manufacturing and ISM prices paid out, both out from the US. And then we have construction spending also from the US, which is less important. But very important, at 1900 GMT today is the FOMC minutes from their meeting at December 11th. Watch for this. And finally, at 2200 GMT, we have the ABC consumer confidence out. In the coming days, tomorrow we have from Sweden unemployment rate, and from the US we have a number of labor market data. We have the ADP employment change, we have initial jobless claims, and we have continuing claims, and from the production side we have the factory orders, and also regarding to oil trading we have the oil inventories reportings out also tomorrow. At the 4th of January, that is Friday, we have the Swiss CPI out. We have from UK we have the M4 money supply and the mortgage approvals. The mortgage approvals will indicate how the UK housing market currently is at, what state is at. And from the US on the 4th of January we have the change in non-farm payrolls, the unemployment rate, change in manufacturing payrolls, and ISM non-manufacturing. And finally, on Friday from Canada, we have the industrial product prices, and we have the purchasing managers index. Today's FX trade is the euro-dollar trade. Buy below 147 with a stop at 145.23 offered, and this will target 149. And today's stock trade is that we are trying to riding the wave of bad UK housing market. We selling red Derwent London, which is red in the Saxo trader as DLN XOLN. We like the downtrade in this company, and we will sell within the entry at 1410 to 1430. We'll keep a stop loss above 1500, and we'll be targeting 1300. That was all for today's market call. Yes, thank you for joining, and have a pleasant day.